Welcome. Tonight, we're diving into the wild world of cryptocurrency, specifically XRP. It's the digital coin with a fan base as passionate as any, and a myth that it's destined to become the backbone of global banking. But is this revolution real, or just a story that's gotten out of hand? We'll separate hype from reality and see what banks, regulators, and Ripple, the company behind XRP, are actually saying. Because in crypto, believing the wrong thing can cost you more than just bragging rights. To really get to the bottom of the XRP story and to understand why it's such a hot topic in the world of cryptocurrency, we need to rewind the clock and look at where it all began. There's a lot of noise, hype, and even some myths floating around about XRP, but the truth is, its origins are actually pretty fascinating and a bit different from what you might expect. You see, XRP didn't just appear out of thin air. Its roots go back to the early days of digital currency innovation, when developers and visionaries were searching for ways to make money move faster and more efficiently across borders. While Bitcoin was grabbing headlines as the first decentralized digital currency, a group of engineers saw an opportunity to solve a different problem: the slow, expensive process of sending money internationally. In 2012, XRP was officially launched. Unlike Bitcoin, which was designed as a peer-to-peer alternative to cash, XRP was built from the ground up to be a tool for banks and payment providers. Its main selling points? Speed and cost. XRP transactions settle in seconds, not minutes or hours, and the fees are a fraction of what traditional banks charge for cross-border payments. This made it a compelling alternative for anyone frustrated by the sluggish pace of the old financial system. The company behind XRP, called Ripple, set out to revolutionize the way money moves around the world. They built RippleNet, a global payments network, and positioned XRP as a bridge currency, a digital asset that could connect different fiat currencies and make international transfers seamless. Ripple's vision was bold: to create a stable, professional solution that banks and financial institutions could actually trust and use in the real world. But here's where things get controversial. Unlike Bitcoin, where new coins are mined over time, all 100 billion XRP tokens were created at once, right at the start. The majority of these tokens were, and still are, held by Ripple itself. This centralization has sparked heated debates among crypto enthusiasts, with some arguing that it goes against the very spirit of decentralization that cryptocurrencies were supposed to represent. Ripple's pitch was clear. They weren't trying to overthrow the banking system. They wanted to upgrade it. By offering a fast, reliable, and scalable solution, Ripple aimed to win over the trust of major banks and payment providers, positioning XRP as the digital glue that could hold the global financial system together. Their marketing strategy was laser-focused on financial institutions, not the anti-establishment crowd that flocked to Bitcoin. Ripple's message was all about compliance, security, and efficiency, words that resonate with bankers, not necessarily with crypto rebels. All of this set the stage for XRP's unique and often misunderstood role in the crypto world. It's not just another digital coin. It's a project with a very specific mission, a controversial structure, and a history that continues to spark debate among investors, technologists, and regulators alike. Whether you love it or hate it, XRP has carved out a place for itself as one of the most talked about and polarizing cryptocurrencies on the planet. Let's take a step back and look at how Ripple, a company that started out selling software solutions to banks and financial institutions, became the center of one of the most persistent narratives in the crypto world. Ripple's original mission was simple: make cross-border payments faster, cheaper, and more reliable for banks and payment providers. Their software, XCurrent, was designed to help banks communicate and settle transactions more efficiently without necessarily using any cryptocurrency at all. But somewhere along the way, the conversation shifted. Suddenly, the idea took hold that all banks will use XRP, Ripple's native digital asset, as the backbone for global payments. This leap from software provider to global currency backbone didn't happen overnight. It was fueled by a mix of ambitious marketing, hopeful speculation, and the natural excitement that comes with disruptive technology. As RippleNet began signing up hundreds of financial institutions, headlines blared about new partnerships and integrations. Each announcement sent waves through the crypto community, often causing XRP's price to surge as investors speculated on what these deals might mean for the future. The excitement was palpable. People believed they were witnessing the dawn of a new financial era. This is where the myth took root, that banks were secretly preparing to use XRP for all their cross-border payments, and that this would send the token's value to the moon. The idea was simple, seductive, and easy to spread, especially in online communities hungry for the next big thing. Influencers, YouTubers, and online communities began dissecting every Ripple announcement, searching for hidden clues and secret signals that might confirm their hopes. Every partnership, every mention of blockchain or digital asset was scrutinized, debated, and spun into evidence of imminent mass adoption. Even the vaguest reference to digital assets in a press release was enough to spark a frenzy. For many, it became proof that XRP was on the verge of being embraced by the world's biggest banks, even if the actual details said otherwise. This belief was further fueled by a deep-seated distrust of traditional finance. Many in the crypto space see banks as slow, outdated, or even corrupt, and they're eager for a new system that puts power back in the hands of ordinary people. For these believers, supporting XRP isn't just about making money, it's about being on the right side of history. It's about championing innovation, disrupting the status quo, and building a better financial future for everyone. The result? A self-reinforcing echo chamber where skepticism is dismissed and lack of evidence is twisted into proof. In this world, hope and hype often outweigh facts, and the dream of XRP as the banker's best friend lives on, regardless of what's actually happening behind closed doors. Let's look at the facts. When it comes to Ripple and its relationship with the banking sector, there's often a lot of hype, speculation, and confusion. But what do banks themselves actually say and do? To get a clear picture, we need to separate the marketing from the reality and examine the real-world actions and statements of major financial institutions. Most RippleNet partners use Ripple's messaging software, not XRP. This software helps banks and payment providers communicate and settle transactions more efficiently, but it doesn't require the use of Ripple's cryptocurrency, XRP. In fact, the vast majority of these institutions have chosen to stick with traditional fiat currencies or their own internal systems, rather than adopting XRP for cross-border payments. The distinction is important. While RippleNet's technology is being tested and used, XRP itself is rarely part of the equation. Santander and American Express, two of the most high-profile names associated with Ripple, have piloted Ripple's technology in limited trials. However, neither bank has integrated XRP into their core payment systems. Their experiments focused on the underlying software, not the cryptocurrency. This is a pattern seen across the industry. Banks are interested in the efficiency of blockchain, but wary of volatile digital assets. MoneyGram, for a brief period, did use XRP to facilitate some cross-border transactions. However, this partnership ended abruptly after the U.S. Securities and Exchange Commission filed a lawsuit against Ripple, alleging that XRP was an unregistered security. The legal uncertainty made it too risky for MoneyGram to continue, and they quickly distanced themselves from XRP. The SEC's lawsuit against Ripple sent shockwaves through the financial world. The accusation that Ripple was selling unregistered securities created a chilling effect, making banks and other regulated institutions even more cautious about getting involved with XRP. Regulatory clarity is crucial for banks, and any hint of legal trouble is enough to halt adoption in its tracks. In response to these challenges, Ripple has shifted its public messaging. Instead of promoting XRP as the future of global payments, Ripple now emphasizes its work with central bank digital currencies, or CBDCs. The company is positioning itself as a technology provider for governments and central banks, rather than pushing for widespread XRP adoption among commercial banks. Banks are among the most heavily regulated entities in the world. They have strict compliance departments and risk management protocols. Any asset or technology entangled in ongoing legal battles, like XRP, is typically avoided until there is complete regulatory clarity. For banks, reputation and compliance always come first. The dream of XRP becoming the world's reserve currency, a vision once promoted by some in the crypto community, has largely faded. Today, XRP plays a much smaller, more specialized role in the financial ecosystem. While Ripple's technology continues to evolve, the idea of XRP as the backbone of global finance is no longer a realistic expectation. Ripple's pivot to CBDCs is telling. Now, they offer tech for central banks to build digital currencies, not for banks to use XRP directly. XRP's new role? Maybe a bridge between CBDCs, if central banks choose Ripple's platform and agree to use XRP. But that's a big if. Most experts doubt central banks will rely on a volatile private token. The grand vision has shrunk to a speculative possibility. XRP's future as a global bridge asset is far from guaranteed. This isn't just a nerd debate, it affects real investors. Many have bet their savings on the banks will use XRP story, only to face losses. The disconnect between hype and reality damages crypto's reputation and fuels skepticism. It encourages risky, get-rich-quick thinking over sound investing. Ripple benefits from the speculation, but can't fully endorse or deny the myth. The result? Endless ambiguity, confusion, and financial pain for some. The lesson? Don't let hype dictate your financial decisions. Step outside the XRP bubble, and experts are skeptical. Banks have no incentive to use a volatile asset like XRP. They prefer stability and regulatory clarity. The XRP market isn't deep or stable enough for global banking needs. Experts say banks want to reduce risk, not add it. Even within crypto, many see Ripple's approach as neither decentralized enough for purists nor stable enough for banks. XRP is stuck too corporate for crypto, too risky for banks. The myth doesn't hold up under scrutiny. The XRP saga is a clash of two realities. Online, XRP is the future of finance. In boardrooms, it's barely mentioned. The community interprets every bank blockchain project as XRP adoption, but banks are building private systems. This confusion keeps the myth alive, but reality is catching up. As time passes and banks move on, belief alone can't sustain the narrative. The story of XRP is about hope, hype, and the power of belief over evidence. So, what have we learned? The XRP banking takeover is a myth built on speculation, not evidence. Ripple is pursuing real business with CBDCs, but the grand vision for XRP isn't materializing. The lesson? Be skeptical, do your own research, and don't let hype guide your investments. In crypto, the best stories are often just that, stories. Good night.